The other question that comes up is how important is a CPA that's in the state or even the city that somebody lives in versus, I know there's, accounting firms all across the country. And so, but people get weird about using an out-of-state accounting firm. What's your thoughts on that?
The overriding answer is find an accountant that you like, that you trust, that cares about you, that gets product back to you reasonably within reasonable time, prompt, fair fees. Hang with that person. Now, I've got clients all over the country. And accountants will tell you we've got the internet and we've got PDFing and we've got portals. It's all transparent. True. So I've got a number of them out of state and I think I take care of them. And the overriding principle is I care for them and we've got a good relationship. So they're in Ohio, they're in Kentucky, they're in Florida. I'm doing a lot of their work and it's fairly transparent. On the other hand, I'm trying to keep track of one gorilla, the IRS. There's 50 monkeys out there, all the states. And they're their own domains, particularly California, New York, Pennsylvania. There's a number of them out there that their own domains. And I cannot keep track of what's going on in the townships in Pennsylvania or the boroughs like the Queens or Brooklyn. You've got New York City, you got the boroughs, which is Queens or Manhattan. Then you've got the state, and they've got all these internet rules. So if you like your accountant and they take care of you, you're going to cross state lines. On the other hand, there is some complexities in some of the states that you can miss and that you're just not aware of it. I just got done with a tax return for a client here in Colorado Springs, and he's got 5 different Colorado credits as far as hiring people, computer equipment, enterprise zones, opportunity zones, hub zones, different sales tax issues, different jurisdictions. So the bottom line is it's always preferable to have that number one accountant that you like, that you've got trusted, that's in the same town, that you can go squeeze and touch and kiss or slap, right?
Right. You mentioned the 800-pound gorilla, right? The Internal Revenue Service. So I wanted to pick your brain and get your best advice. Number one, how does a business like ours stay out of the audit radar as much as possible, right? That there's no guarantees, no firm is ever going to guarantee that, hey, we're going to do things so well that they'll never look at you. But if we do get looked at, what does the partnership look like with an accounting firm when you do get that phone call, letter? I guess they don't fall.
Got it.
Yeah.
Got it.
Don't fall for the scam phone calls, right? But the letter, the visit with the IRS.
Do not. I don't care what the ads on television or the radio tell you. Do not be intimidated by the IRS at all. Okay? They'll intimidate you to the point where you feel like you're guilty, you're wrong, and you just bend over and write a check. That should not be the case. Most of the audits come out where the accountant was lazy, did not review their work. It's like you when you just put on a new muffler and and you forgot to put the clamps on and the thing fell off. Okay, 3 miles down the road. They're income tax return preparers because they're not focusing or they don't care or they got too much work and they're too busy. I saw one from another CPA firm the other day with a $30,000 expense. It was for legal and professional. Said $30,000. It was for legal and professional, but they put laundry and cleaning. Who spends 30 grand on a company that generates 100 grand and 30 grand in laundry and cleaning? So most of the stuff that you get looked at is just common mistakes and errors. And like you looking at it, Greg, or like the IRS going, what's this? This doesn't make any sense. If you do get looked at, don't do it yourself. Get yourself use your existing accountant, and they should go in and bat for you. If they got any pride at all, they don't want to lose. They got their egos involved, and they're going to fight as hard as they humanly can for you because they're going to treat your money like it's theirs. So never go down by yourself. Always use an accountant or an EA, or CPA it should be, as we mentioned earlier, to represent you.
So is that something to ask maybe in the initial interview? How many clients have you represented in front of the IRS? What were the results? Did you retain those clients after the IRS audit, or did you get fired?
Yeah, that's a good question. Yeah, I might. I've never been asked that question, but I think it's a very good question. We don't get audited much because it's all in disclosures and the way you put the Christmas present together. It's got to, where the numbers are coming from may be conservative, may be aggressive, but it's the way it's presented.
Right.
But you may want to ask that of an accountant is how many. And the question is, hey, do you charge me? Does this come along with the tax return you prepared? Usually they're going to charge you because it's additional time, but they shouldn't do it at full rates. Okay. That's how I handle it. I cut them in half.
Now, what happens if the bottom line, it's the accounting firm's mistake?
Oh, if it's the accounting firm's mistake? I misspelled somebody's name one year on a tax return, and it was a gorgeous tax return. I saved him a bunch of money, and I put one extra F in his name. I said, your tax return's for free. Because if you look at a tax return and they don't spell your name correctly, or they don't have your Social Security correctly, you got no confidence in the underlying numbers. Mm. So people that stand up, I do. If I always cover penalties, I haven't had to because I haven't had any major faux pas and mistakes. But an accountant should step up, and if they do something wrong, they ought to pay your penalties, they ought to pay your interest.
So going back to that, we've got things that business owners may try and deduct or make cause red flags within their tax return, within their financial statements. So obviously that's a pitfall. If they've got a good accounting firm, they're going to say, hey, it doesn't pass the sniff test, right? Those things that we're talking about. So that's very important. And I've seen that where, super inflated rents and, meals and entertainment. And, the joke was one time talking to somebody, they bought a floating office, right? They tried to stick a boat into their finances. So, and we've been working together a long time. I'm a believer, I don't take cash out of the business and delete tickets and all the crap that I've seen a lot of small business owners do. And I've actually been criticized for that. But I'm thinking, I want clean books. If I ever get audited by the IRS, I want to be able to say that. Yes, I probably pay more than tax than some people do, but I also want to be able to take those financial statements to the bank and they can go, hey, this guy's legit. He's not trying to put any fluff into it. So that was some advice I got literally from day one when I started my business. Pay your taxes and then you can borrow more money. Don't play games. So in that vein of thought, what are some things that you've seen as business owners go from a real small mom and pop and growing their business into real, big, medium-sized businesses? What are some of the pitfalls and mistakes you've seen people make? And what would your advice be to our viewers to avoid those mistakes?
I have found from being in big-time accounting, getting out, starting from scratch in my basement to having 25 to 30 employees at this point, I've changed. I was a technician. I was a mechanic. And then I was a mechanic of mechanics. So the new mechanic came in and I trained the mechanic by showing him what I was doing. So I have morphed over the last 20 years into more of the financial piece, or more of the strategic piece, where we're going, the direction, the pitfalls, the liability. It's taken me a while to develop into a businessman. You might want not only an accountant, because I was an accountant, I still am an accountant, but I've morphed into a business person. A lot of accountants are not business people. So in your industry, the mechanic that wants to double his salary or triple it has got to learn how to grow out of being a technician over time, train other technicians, and then train those technicians to train those technicians. It morphs. Delegation, confidence, stepping back, finding good people.
Great advice. Great advice. I think you said it very eloquently, but I think as people watch this video series, they're going to hear that same message over and over. And that's really, as we work with shop owners all across the country, helping them grow, it's getting that mentality that, hey, I'm okay doing this now, but I'm looking into the future. I'm working out of my job of being a technician, service writer, service manager into the role of CEO and what that journey looks like and helping them along the way.
It's a tough transition.
It is.
It's confidence. It's leaving your comfort zone. It's change. And that's why the vast majority stay right where they're at.
Exactly.
And you got to be a risk taker, and you got to have confidence in yourself that you'll go over, through, around, you'll get there.
Well, Greg, thank you very much. We do have one more topic we're going to be discussing with Mr. Schaefer and his vast experience as a CPA, accountant, and a strategic business owner himself. So we'll see you guys on the next video. Thank you very much.